Hello and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Panelists today are Alan Bush, our Senior Financial Economist, and Mark Soderberg, our Senior Ag Market Specialist. Starting with Alan. Alan, what reports do you see moving the markets this week?
Okay, well, first of all, on Tuesday, we'll have the October Consumer Price Index. That's expected to be up 0.1%. Then on Wednesday, we'll have the October Producer Price Index, also guessed at up 0.1%. Retail sales for October predicted to be down 0.3%. Then on Thursday, we'll have jobless claims anticipated to be 222,000. The November Philadelphia Fed Manufacturing Index at a negative 11. October industrial production down 0.3%. And capacity utilization at 79.4%. And the November housing market index at 40. And starts also on Thursday, it will be housing starts at 1.35 million and building permits at 1.463 million. So a lot of reports on Thursday, really not that much on Friday.
Okay. What is the outlook for the U.S. dollar index?
Okay, well, the dollar index has underperformed the news since early October. Last week, there was just limited strength when we did have U.S. policymakers having some rather hawkish comments, including Fed Chair Powell saying that the central bank is not confident that it has done enough to bring down inflation. Powell also said that the central bank will not hesitate to tighten more if needed to bring inflation down to its 2% target level. So despite the hawkish comments from the Fed, the dollar really has not done that well. Also, it has really not changed the needle very much on what the Fed is expected to do at the December 13th meeting. Still only a 14% probability that the Fed will hike by 25 basis points at that meeting. Despite all of this hawkish rhetoric, still appears that the Fed is not in a position to be aggressively raising interest rates. So with the Fed as hawkish as they are, I think many analysts believe that the Fed has hiked for the last time with the current level where the Fed funds rate is now.
All right, Alan, lastly, what is the outlook for interest rates at the front of the yield curve versus futures at the long end of the yield curve?
Okay, well, when you look at a chart of the futures at the short end of the curve, they've actually performed very well. I think this is possibly a reflection of the belief that the Fed will be cutting rates sometime next year, probably late next year. So that is supportive to the front of the curve. However, the long end has underperformed. That would just be especially the 30-year Treasury bond futures. I think that is probably because of increased perceived credit risks for the long end, especially after Moody's on Friday downgraded the outlook for U.S. Treasury debt. So I would expect these trends will continue. Futures at the front of the curve will probably trend higher, while futures at the long end of the curve, especially the 30-year bonds, will probably underperform.
All right, thanks. Moving over to Mark. Mark, were there any surprises in last Thursday's USDA report?
Well, on the soybean side, no, not really. Production and stocks came in very close to our expectations, which were up a little bit from the October estimate. On the demand side of the balance sheet, we thought we'd see a little bit of a shift away from the exports and into crush in order to support the continued expansion of renewable diesel. We did not see this happen this month, however, would expect to down the road, despite the recent surge in export demand to China. How far down the road will largely hinge on if we see a government shutdown later this week and how long that might last. However, we do expect these lower figures, probably by the January report. In this past week now, we've seen between China and unknown, just over 3 million metric tons of soybeans purchased. That's about 112 million bushels, and that's ahead of Wednesday's meeting with President Biden and the Chinese president in San Francisco. In corn, the USDA, they raised ending stocks a little bit, which was in line with our thinking. However, for much different reasons, we were looking for a slightly lower production and usage, while the USDA raised production 170 million bushels to a new record, 15,234,000,000 bushels, and they also raised demand. We remain a little bit skeptical of the higher export forecast in corn, fearing that we may need to see lower prices in order to reach this. As expected, there was no changes to new crop production estimates for Argentina or Brazil, as weather now is starting to take center stage down there.
All right. Can you give us a quick South America weather update?
Yeah, temperatures across central Brazil, which is really the northern growing regions of the country. It was extremely hot this past weekend. Temperatures soaring up into the 104 to 108 range in several areas with no rain. It doesn't look like that's going to change this week either. However, there do appear to be better prospects for rain and cooler temperatures emerging the last week of November. And in southern Brazil, just another round of heavy rains this past weekend. Rains continuing here on and off over the course of this week. So they're definitely going to need to see a shift in this overall weather pattern by the end of the month in order to reach the current production estimates, not just for soybeans, but also for corn, as further delays with the soybean plantings will impact their large second crop, which is planted in the February-March timeframe right after the soybean harvest. So South American weather and Chinese buying is a big reason for the uptick in soybean prices here to begin the week.
All right, and finally, Mark, what impact would a U.S. federal government shutdown have on the ag markets?
Well, from an actual supply and demand perspective, really none. Markets will still trade. Spreads will still kind of provide a big picture overview of whether we're bearish or bullish climate. And we'll continue to get weather forecasts and provide analysis on crop production updates outside of the U.S. What we won't get is our weekly information on exports, EIA, energy information, ethanol production, and the position data from on large traders from the CFTC. And if the shutdown were, to happen for an extended period of time, these monthly USDA reports. Fortunately, the next one in December, that does not provide any production information. It's just a supply and demand report with the final production from the 2023 crops and the winter wheat planted acres. That comes out early to middle part of January. So hopefully the shutdown does not last that long.
All right, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.